Hello traders, Cousin Vinny coming to you from theclosingprint.com, August the 2nd, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher with the exception of the Dow Industrials. London Stock Exchange and the FTSE moved higher. Nikkei, the Hang Seng, and the Bombay Stock Exchanges all moved lower. The emerging markets eking out a 0.35% gain. All of the FANG stocks were higher with the exception of Google. We had Microsoft higher on earnings, bouncing off of the 50-day moving average area. We'll look for a follow through this week. Intel was lower on earnings, and Tesla and Roku were also higher last week. Roku has earnings this Wednesday. We added a new feature this week to condense the size and the time of the opening monologue. Down at the bottom, you'll notice that we have 10 bullish indicators, 10 neutral indicators, and 0 bearish indicators. These are meant for short-term trends that we can see are neutral because we have 10 and 10 out of 20. They're balanced and neutral. We have a intermediate term and long-term trends bullish because price action is above a bullish trending 50-day moving average and the 200-day on most of the indices. This addition will make it easier for short and long-term analysis, a little bit easier, and should help you focus on each of the areas of trading or investing that you might be interested in. We'll continue to point out items or indicators that are of major importance to us as traders and investors. We will look at these IBD 50 names for setups this week, in addition to MarketSmith Growth 250, top volume percent gainers in green, and the blue dot scan candidates from MarketSmith in cyan. And finally, we have Bukowski with 505 green, his CPI signal green since June the 29th, moving from 25% last week to 91.7% this week. That's bullish with 15 bearish setups, 55 bullish setups, and 356 patterns waiting for breakout. Bottom line, we are neutral. We're in day trade, short-term, swing mode. VIX is remaining the key, and we do have S&P 500 and Spider resistance and support as indicated. The SPY Rinko chart shows us that we're still bullish. We're producing white bricks. This removes the noise, also removes time as a factor. Only price is considered. If we continue to build white bricks, we are bullish. Once we see a red brick, it'll be a reason to get more cautious and then reassess the markets accordingly. The 60-minute time frame shows right where we found support along this major volume by price level, noted with green shading. RSI is back above 50 and price is right up against resistance that we saw last week. The daily time frame, we also have RSI above 50 and trending higher. Price action is above the 9 and 21 day, and we have volume increasing on Friday. MACD is turning and could continue higher as a function of price this week if we break out above the pivots that we saw in the previous week. Therefore, the weekly trend, as previously mentioned during the opening monologue, is bullish. The same applies for the NASDAQ, which we can thank Apple, Amazon, and Facebook with their earnings out on Thursday into Friday trading, with RSI back near 70, showing a strong trend, and price action back near recent highs. MACD is bullish above its signal line, and volume did increase, similar to these two distribution weeks that we saw in the previous weeks, leaving us with a more bullish than bearish setup at the present time, unless we fail at a breakout this week. Small caps remain the one component that is lagging, still above its 9, 21, and 50-day moving averages with RSI above 50. Therefore, if we break down the components, the S&P 500, the mid-cap 400, and the S&P 600 small caps, We can see we're still on a bullish signal, green and rising. We're above the trigger line at 2, and price action remains above the 21-day, closing in the upper half of the daily range at the extreme highs market on close. So this is one of those bullish indicators we mentioned during the opening monologue. In addition, if we consider the S&P 1500 and break down the breadth for S&P 500 in the upper panel, mid caps, and small caps in the lower two panels. Small caps are the one index that is lagging in terms of breadth, so we want to see those moving higher this week, while we look for the New York Stock Exchange, an even broader market measure of participation with 2,900 stocks, still above the zero line, but somewhat neutral towards the close as the moving average did move lower, in addition to the New York Stock Exchange advanced decline, which moved lower as well on Friday. So this is one of those more neutral, still bullish indicators referenced in the opening monologue. Additional information for the New York Stock Exchange in the McClellan oscillator, we can see that we have a trough close to the zero line, looking for a follow through. And if we zoom in, we can make out a flattening of this particular oscillator, which could give us a neutral reading going into this week, while the same McClellan oscillator for the NASDAQ is clearly dropping a little bit more. So this is more neutral, could turn back up as price action lifted at the end of the week for the NASDAQ 100 in the lower panel, while we start off the week on a bullish signal with regard to VIX. As long as it stays green, we can expect to see higher highs and higher lows. As we've seen in the past, this indicator is very useful as a safety check before going long or short, as a reflection of the VIX trend on the 60-minute time frame. If we look at the daily, we can definitely make out a 3-week period where we stay below the 50-day moving average, which is in a bearish trend, and closing near the lows of the range from last week. And as you know, as VIX moves lower, market makers, dealers, and institutions will close their short put positions and turn around and hedge their portfolios by buying futures. So if you're bullish, you want to see VIX moving lower. The bond stock ratio in the lower panel, weekly time frame between the 10-year UST and S&P 500 is dropping, therefore bullish below the 65 period moving average, the blue line. We want to see that continue if you are bullish equities. In addition, as a measure of risk on and risk off, we want to see junk bonds moving higher on this weekly time frame, showing us 3 white soldiers off of the 65 period moving average, the green line, moving above volume by price resistance, headed for 52-week highs. And look for a high yield corporate debt to do the same thing. 4 weeks off of the 65 period moving average, rising above recent pivots, RSIs above 50 and trending. This is bullish for equities at the present time, and previously in February we can see how the markets led lower in these particular instruments, with junk bonds and high yield corporate dropping off just prior to the sell-off on February 21st into the gap down on Monday the 24th. While yields do move higher, there is the contradiction in that bond prices are moving higher. This is the short end of the curve, the 1 and 3 year, while the 7-10-year IEF also gives a similar picture, in addition to what we see in TLT, the 20-year, all three in a bullish trend, while AGG, the Barclays Aggregate Bond Fund, also moving higher. This is a kitchen sink of bonds, collateralized mortgage debt, and everything related to the bond market. This is used as a benchmark by bond traders. It is bullish. We do have a position in this since October of 2018. One of the reasons why we like to have a balanced portfolio. If you also have had good returns in your equities as well as your bond portfolio. Now, this could be moving higher like it did back in 2014. The bond market and the S&P and indices all moved higher at the same time. It could just be a reflection of safety or concern still in the markets. There is still a lot of FOMO out there, funds that are waiting to come into the markets, sitting on the sidelines. As we discussed on Friday, 15 trillion or more, as pointed out by Mikey in the room. That said, if we do shift to currencies, we can definitely see that the British pound has been outperforming the US dollar. Despite that, the FTSE and the London Stock Exchange managed to close bullish last week, holding the 21-day, while the US dollar did bounce. For the past 3 weeks, we've been moving lower, now well oversold and showing signs that we could bounce this week. That'll put a headwind on commodities. As you can see, stochastic is turning up. MACD histogram is starting to turn, and price action, as those two are based on, also moving higher with the potential for a retracement back to the 95 zone. So if you are in commodities like gold that are at extreme highs, accelerating away from the moving averages, consider taking some off into strength. All the while, we've been watching copper over the last few months. It's been consolidating for the last 3 weeks. Current gains have us back above 52-week highs. If this starts to pull in, watch builders, construction-related names for some consolidation as well. Those have been fairly bullish going into the summer. In addition, the caveat is we have hurricane season. We have a tropical depression hurricane off the coast of Florida on Sunday. So some of these stocks will most likely see a boost or a move higher. Roofing, siding, windows and doors, traffic signals, and a lot of other infrastructure related type industry groups should see price action stabilize or move slightly higher during this particular time of the year. And also consider the West Texas crude and Brent trends, which for the last 9 weeks have been consolidating in an ascending flag or channel pattern at highs and resistance that we've seen previously. A break above this level would be bullish for equities. A move lower would put some pressure on the S&P 500 from the consequence to the energy sector. Another one of the indicators that is more neutral, slightly bearish, is the sector heat map. We can clearly see a change in April from green, chartreuse, through yellows, some more greens, and then red and crimson, backing off towards a more neutral to bullish look at the present time. Each week updated from left to right along the top panel, while international indices show a little bit more red in Europe. Emerging markets off a little bit, and with China and Southeast Asia under a little bit of pressure. With this in mind, we do want to keep an eye on rotation. We saw some improvement in industrials, financials, some sustained strength in materials. We also have the XLP, real estate, and XLU sectors improving, starting to head up towards the upper left quadrant, which would be improving as well. So watch real estate this week. We'd like to see consumer discretionary turn back up, as strength in XLY, consumer discretionary, relative to XLP, consumer staples, would give us a bullish signal. You can see this is nothing like what we saw in February, where institutions were positioning in a bearish trend. We also saw back in 2018, before the peak, that we had about a month or two before the markets rolled over in October of 2018, before the 20% drawdown. So if we look at this current time frame, it looks more like 2018 before the peak. So look for a flattening here. We'll keep an eye on it as well. Going into this week, we want to pay attention to sectors that are below their 21-day and 50-day. Like we see here on biotechs, real estate is above, transports, and so on. So in order to look for follow through, we want industrials to continue higher, materials to bounce, communications to follow through, thank you, Facebook, financials to bounce as well, and have these sectors moving higher. The more sectors moving higher, obviously, the better for our equity trades to the long side. Here are the IBD 50 stocks for the week ahead. Each week we look for stocks on the bullish side that are above their 21-day, 50-day moving averages, preferably have tested or bounced off of the 9 or 21-day to start the week and not too extended. A number of stocks we'll look at this week fit that criteria, like Adobe. Chegg is following through. The gold stocks, Franco-Nevada and Kirkland Lake, continue to move higher. Might see a little pressure this week. Remember what I mentioned about the US dollar. GSX, very close to the 21-day. Looks like it could take off this week as well. So let's take a look at these stocks on an individual basis. Adobe has been a nice stock for us, trending over the last several months above the 9 and 21-day. The last few weeks we've consolidated above the 21-day at the close on Friday. RSI is starting to rise. More importantly, if you use William O'Neill's strategy, when a stock gets extended, it broke out and trended for a long time, you want to pay attention to how the stock reacts at the 10-week moving average. In this case, Adobe turned before it reached it. When it's below it, you want to stay away from the stock. When it's above it, you want to continue to look for that 9 and 21-day to hold price action. Right now, this looks like a good setup going into this week using this assessment method, daily and weekly. Advanced Micro Devices had a nice week. Looking for a bit of consolidation. Sideways action is good too. We saw buyers at the low of the day on Friday. Akamai, similar to the thoughts on Adobe, the 10-week moving average, back above the daily 9 and 21-day. Nice follow through. Consolidation at the 50. Buyers stepped up. We'd like to see more volume. That's the only caveat at present. Applied Materials, same idea. Holding the 9 EMA. Buyers stepped up on Friday right at the moving average. Followed through on the trade that we saw Wednesday into Thursday. RSI still above 50. Autodesk, same idea. A little bit flatter price action, so we'd like to see a follow through. Volume was very spectacular on Friday. Berry Global, new on the list, relative strength, RSIs rising above volume by price resistance. No overhead supply at these levels at 52-week highs. Above average volume showing institutions are picking up shares. And MACD's above its signal line and rising. Cadence Design following through. Chegg following through. Looks like it's going to break out of this little tight range. With the weekly time frame looking very bullish, the 10-week moving average is rising rapidly. DR Horton, new on the list, looking for follow through in the builders. Remember, copper's chart is consolidating, so we want copper to break out this week. So keep your ear open for anything related to copper being bullish or bearish. With bullish, we'd see follow through in many of the builders most likely. Focus Financial, like Adobe, has been in a bullish trend over the last several months. Pulling back to the 9 and 21-day, a good setup. If we bounce on Monday, see a follow through. A safer trade would be another bullish day on Tuesday, while keeping an eye on the weekly time frame, which turned down a little bit last week. So until that turns up as a function of price on Monday and Tuesday on the daily, look for a follow through and for this to turn back up this week. In addition to the financial sector strength, we're looking for on Monday and Tuesday as confirmation of sector rotation continuing. Franco-Nevada pulling back to the moving averages. Gold, remember, is at highs. US dollar looks like it's going to turn, so this could be a sign that we could see a little further consolidation in price action. GoDaddy, looking for this to turn back up. If we get above the 21-day, you got this gap between the 70 and the 74 level. Maybe a follow through for a day trade. RSI is rising. GSX looking for a breakout of this ascending triangle after 2 months of rising, We've consolidated for a few weeks. This looks like a breakout is looming. Watch for RSI to continue higher. The fact that RSI is staking along the 70 level is just telling you there's a very strong trend in the stock. IIPR, I know Mikey's looking at this one for a follow-through in the real estate group. Company purchases and leases back climate control facilities for the purpose of growing medical cannabis for the industry. CLAC, KLLC, looks like it's going to follow through. Same idea as Adobe, pulled back. The 10-week came right back down to the moving average and bounced, so that's bullish for CLAC as well. Look for semiconductors to follow through on stellar performance in AMD and NVIDIA, while we watch for Intel to base and turn at some point for an entry. Kirkland Lake really got a boogie on last week. This one's been underperforming Franco Nevada up until last week. Really took off. I wouldn't chase it up here. Look to take some profits into strength. Look for a little pullback. If the US dollar fails to move higher this week, gold should move higher along with gold stocks and miners. Kroger looking for a bounce after the pullback. Lam Research trending. Microsoft consolidating above 50 today. We did have a end of day rally with the news that Microsoft would be interested in buying the US assets of TikTok. Late on Friday, I believe the president mentioned something about not approving that deal if it were to come before legislators for whatever reason. So I don't know what Microsoft's going to do with regard to that news, but watch it on Monday and Tuesday. Still looks very bullish. Model N Inc., MODN. This one's following through, looks very bullish as well. Look for a follow through on Monday. RSI is above 50, moving above areas of supply as we near 52-week highs. NASDAQ, NDAQ. This one looks good too. Pullback, looking for a follow through. A little extended on the weekly, so maybe a little bit more consolidation. NVIDIA looking for a follow through. Same with Palomar Holdings. PayPal, one of the better looking stocks in this payment processors group. Square looked okay last week. MasterCard, just okay. And Visa, not so much. That one pulled back a bit. PennyMac Financial, bullish trend. RSI showing strength of trend. A little bit above average volume on Friday, so watch this one. Could pull back a little bit more. Perkin-Elmer, a recent trade a couple of weeks ago. Robert Kaplan in the live stream room pointed this one out as it started to break out. It's been trending, continues higher. RSI shows strength of trend. Above average volume shows that institutions have been picking up shares. They don't usually trade for a week or two. They usually look at the longer term, months at a time. So look for this to follow through. MACD's above its signal line and rising. ServiceNow, nice trend. Looking for a breakout and a follow through. RSI is above 50. Volume increasing. MACD is flat. Teradyne, consolidating. Looking for a breakout. Weekly, rising away from the 10-week. While Trade Desk continues. Closed at the upper part of its range on Friday. Robert mentioned this one as well. This one continues. Looks like RSI is pointing to and suggesting a breakout, at least a test of these recent highs in the short term. Could be a day trade on Monday, Tuesday. MACD's turning, volume increasing. So this just might follow through and break out to 52-week highs. Thermo Fisher, for all the same reasons, bullish trend above the 9 and 21 day. RSI showing strength of trend. Volume showing institutions have been picking up shares for the most part over the last 6 weeks or so. Mostly bullish, while Tractor Supply continues to consolidate. We did find buyers at the 21 day. Bullish trend. The last time it came down to the 21 day, it followed through. No reason to believe it won't do that again. Viva Systems, over the last 6 or 8 weeks, we kept talking about the strength of the trend here. RSI stays above 50. So if you are a swing trader, what you want to see is a stock above the 9 and 21 day. Pullbacks to the 21 day get bought. RSI stays above 50 all the while, telling you to stay with the trend. MACD is flat to sideways at the moment. Volume is starting to pick up towards the latter half of the week. Workday, I'm looking for a entry on this one. So if it pops back above the 9 and 21 day, that would be something I'd like to see for a bullish trade swing. And Zoom Video showing remarkable strength. Every time you try to short this stock, it reverses quickly. So apparently institutions like it. Volume has been below average after what we saw back in June when it broke out, but it's consolidating nicely. It's not losing the 50-day. It's consolidating above. And like I said, shorts are getting creamed every time they try this. Unless they're doing a day trade, the stock continues to find buyers at this level. In addition, make sure you check out the Dow industrial stocks that are showing relative strength. Those are pointed out in the opening monologue. Cisco has earnings on deck shortly. Looking for a follow-through. Bullish look to it. Coca-Cola at the 21-day. PG trending. And so on. We got Verizon with a nice flag. That one looked really good when I was reviewing it this weekend. Looking for a follow-through and a breakout above these pivots. Well, we also covered stocks in the relative strength scan. Those are on the opening monologue list as well. Make sure you check those out. We've gone through each one of these stocks to see which ones look the best. In addition to the 100% volume screen, stocks that are trading above average volume, and stocks from the blue dot scan in cyan in the opening monologue. So make sure you check these out. We're looking for the stocks that gave us signals on Friday going into this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter, August the 2nd, 2020. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast, so be sure to look for that in your inbox. Otherwise, have a great weekend. I hope this helps, and we'll talk to you soon. Take care.